Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now today we bring to you via this video 6 stocks which are value buys from Kotak Securities and can be accumulated from a 2-3 years perspective. Now post the recent market correction, we have seen a lot of stocks coming at attractive valuations, and these stocks can be accumulated from a very long-term point of view. Also friends, please don't just jump in, please monitor the stocks and let them come at levels where you would be comfortable owning them. Also friends, if you're benefited by the content on this channel, please don't forget to share this video because it could also benefit other people who may watch this video. The first stock on the list is Cochin Shipyard Limited, which is available at Rs 514.35, and the symbol for this stock is COCHIN SHIP. Now Cochin Shipyard Limited is an India-based company. The company is focused on providing and catering to clients engaged in the defense sector in India and clients engaged in the commercial sector. In addition to shipbuilding and ship repair, the company offers marine engineering training. The company's docks include ship repair dock and shipbuilding dock. Now the 1-year chart is not available here because it's a recent listing, but you will see that since listing the stock has generally consolidated at around the same level and has not run away. The market cap of the company is 6,991.87 crores, which means that the company is a mid-cap one. The EPS is 25.52, translating into a price to earnings ratio of 20.15. Now this is below the industry P of 23.83. The book value is 151.08, translating into a price to book ratio of 3.40. The company did not pay out any dividends and the promoter holding is very strong at 75%. The 52-week high for the company is 599, whereas the 52-week low is 435. Now Cochin Shipyard has been performing poorly because of the psychological linkage to the shipping industry. It does a large amount of shipbuilding work for the Navy and Coast Guard. Also the order book is healthy, providing visibility for the next 4 years, and if one removes the cash and other income, then operational ROE goes to 25% compared to 11% reported in the year FY18. Now the second company on the list and a rank underperformer at that is Indo Industries Limited, which is available at 92.65. The symbol for the stock is ICIL. Now Indo Industries Limited is an India-based home textile company engaged in the activity of manufacturing of textile products. The company is involved in the manufacturing of bedding, quilts, pillows, sleeping bags and others. It's also involved in the preparation and spinning of cotton fibers, including blended cotton. The company operates as an end-to-end bedding provider. Now the 1-year chart reveals that this company has been a wealth destroyer and has been on a consistent downtrend throughout the year. The market cap of the company is 1828.91 crores, which means the company is now a small cap. The EPS is 7.75, translating into a price to earnings ratio of 11.95, which is a little expensive compared to the industry PE of 9.63. The book value is 41.87, translating into a price to book ratio of 2.21. The dividend yield percent is 0.86, whereas the promoter holding here is average at 58.94. The 52-week high for the company stands at 210.05, whereas the 52-week low for the company is 90.25. Now the reasons provided by Kotak Securities include, among the home textile companies, primarily the main exporters of bed linen and terry towels like Indo should do well in the next 2-3 years as the destocking by large retailers in the US is coming to an end. As they start restocking, growth should come back. Now Indo is trading at 10 cross FY19 earnings for a 10% ROE profile. Now the third company on the list is UPL Limited and it's available at 719.70. The symbol for this stock is UPL. Now UPL Limited provides crop protection solutions. The company is engaged in the business of agrochemicals, industrial chemicals, chemical intermediates and specialty chemicals. The company's segments include agro activity and non-agro activity. Now the 1 year chart has literally been choppy, and you would see that the stock initially rose for the first few months of the year, then went on a downtrend. The market cap of the company is 36,586.64 crores, which means that the company is a large cap one. The EPS is 39.94, translating into a price to earnings ratio of 18.11, which is much cheaper compared to the industry PE of 43.84. The book value is 143.9860, which means that the company is available at a price to book ratio of 4.9984. The dividend yield is 0.97, whereas the promoter holding here is low at 30.36. The 52-week high is 902.50, whereas the 52-week low for the company is 672.50. Agrochemical stocks, which have corrected a lot, are also contra buys. They like UPL Limited in this space, as it is the largest player in the industry, and its earnings this year is expected to be nearly 5 crores higher than its second largest peer, PI Industries. Now the sector has companies which have an ROE profile of 20% and trade at 1 year forward PE of close to 20. UPL, on the other hand, has a 24% ROE profile and trades at 15 crores on a forward PE basis. Now the fourth company on the list is Corp Limited, which is available at 321.65, and the symbol for it is DBCORP. Now Corp Limited is a print media company which is engaged in the sale of newspapers and magazines. It also earns advertisement revenue from the same. The company also has a presence in radio and digital sectors, and its segments include printing, publishing, radio, event, internet, and power. Now the 1 year chart reveals that this company has also been an underperformer. The market cap of the company is 5,919.26 crores, which means that the company is a mid-cap one. The EPS is 18, which translates into a price to earnings ratio of 17.87, which is largely in line with the industry PE of 17.02. The book value is 86.89, translating into a price to book ratio of 3.70. The dividend yield is 1.24, whereas the promoter holding here is good at 69.84. The 52-week high for the company stands at 401.95, whereas the 52-week low for the company is 310.15. According to Kotak Securities, DB Corp could be a good counterplay in the media space. People have a very negative sentiment towards print media companies, and here it's imperative to say that the worst seems to be behind in FY18 and numbers should improve from FY19 earnings onwards. Due to the favorable election cycle, the print advertisement should pick up in FY19. For more than 25% EBITDA margin, more than 20% ROE, and a dividend yield of over 3%, the stock trades cheap at around 13 crores FY19 earnings. Now the penultimate company on the list is Tata Motors Limited, which is available at 339.75, and the symbol for it is TATAMOTORS. Now Tata Motors Limited is an automobile company. The company is engaged in the manufacture of motor vehicles. The company's segments include automotive operations and all other operations. Now this company has also been on a consistent downtrend and has been a wealth destroyer. The market cap of the company is 98,097.67 crores, which means that the company is a large cap one. The EPS is 32.8642, translating into a price to earnings ratio of 10.7484, which is cheaper compared to the industry PE of 41.95. The book value is 164.5119, which translates into a price to book ratio of 2.0652. The company did not pay out any dividends, and the promoter holding is a bit low here at 36.37. Now, Tata Motors could be a good counterplay in the automobile space. Past few quarters have disappointed investors due to volatile margins and forex hedging losses. Going forward, as the hedging losses unwind, they expect JLR EBITDA margins to improve. Based on the anticipated improvement in EBITDA margins and earnings, the stock looks cheap. There could be a positive surprise from Indian operations, mainly the commercial vehicle business. Now the final stock on the list is State Bank of India, which is available at 252.30, and the symbol for it is SBIN. Now State Bank of India provides a range of products and services to personal and commercial enterprises, large corporates, public bodies, and institutional customers. Now the 1 year chart reveals that this company was an underperformer, but when there was the capitalization of PSE banks announced, the stock had a huge spike. But since the news of the PNB fraud, the stock has also corrected substantially. The market cap of the company is 2,17,786.72 crores, which means that the company is a large cap one. The EPS is 4.62, translating into a price to earnings ratio of 54.61, whereas the industry PE is 18.28. However, it is imperative to remember that it has recently undergone a quarter of losses which have made the PE ratio go up. The book value is 181.61, which translates into a price to book ratio of 1.39, and the debt to equity for this company is 1.1848. The dividend yield provided to the company is 1.03, whereas the promoter holding here is average at 57.46. The 52-week high for the company is 351.30, whereas the 52-week low is 241.15. Now, SBI stock has corrected more than 20% from its recent high. However, the stock can be a good contrarian play as lower slippages in the years ahead, improving loan growth and resolution of IBC accounts are expected to improve margins in the near term. Now, CASA growth has also remained strong in the recent quarters, led by strong growth in savings accounts, and this will provide some relief to incremental borrowing costs. Friends, please don't consider any of these to be stock recommendations on our part. Please go ahead and do your own research. If you are benefited by the content of this channel, please don't forget to share this video. Friends, if you have yet not subscribed to this channel, please consider doing so. Thanks for watching. We will see you soon with another video.